Well, hello again, Solis family. Greg Solis here with our update. Family-wise, been an exciting couple of weeks here. Right now, as I speak, Jack is in Alabama at the Canadian Q School. Keep him in your thoughts and prayers. He's trying to qualify for the Canadian Tour. That would certainly be an exciting thing for him. So we'll keep you posted there. Nicole should be home in April. Fired up for that. Always excited when she comes home. She'll come home around that spring break time. Emily just got off a winter break. She had what they call ski break, which is kind of neat. And she went to Santa Barbara all by herself. We let her drive all the way up there. We have some of our closest friends live up there in Santa Barbara, and she went and stayed with them for a few days. So big girl stuff that she's kind of preparing to get ready to go away to college. So we're kind of letting that leash out a little bit, and she's making good choices. So we're proud of her. So on the family front, we're all doing well. I hope you and your family are doing well also. Market-wise, been a rough month. February was not quite as good to us as January was. January, as you know, we're off to a pretty good start. Interest rates started to come back down. We got the 10-year Treasury down to about 3.4%, and then it popped back up to over 4% this last month in February. The stock market, measured by the S&P 500, was up quite nicely in January, and now we're off from right about 2.5% in the month of February. So we gave some of those gains back that we had in January. So what's going on? It seemed as though we were off to a nice start, but things got a little bit choppy here in February. And again, it's just this inflation issue. It's just an issue that it's been incredibly stubborn. And the numbers came out. They didn't look as good as we wanted them to look. The Fed, of course, has been raising rates to try to slow down the economy, to put inflation under control. And it's just been very, very stubborn. So there's been some talk that the Fed might even go back to raising the Fed funds rate 0.5% instead of 0.25%. I believe they're meeting again around March 21st. We're still in the camp that believes that they'll raise it 0.25% on the next meeting. And so we do think we're still getting close to that end, but it's just been pretty challenging to get inflation under control. They are committed to making sure that we get it down to that 2% level, which is just going to take a little bit longer, which is having an impact on equity markets and the bond market and everything. So the question is, again, as you've heard me say it before, will we be able to have a soft landing, or will we have a deep, prolonged recession? We're still in the camp that we think that there'll be a soft landing, maybe a shallow to short recession. The market has been pricing some of that in. And so we do think that 2023 will continue to move forward. So again, hang on tight. There's some volatility. We're doing a lot behind the scenes, as I say often, to rebalance the portfolios back into alignment, put everything where it needs to be. And again, all things considered, we're weathering the storms well. But if you need us, or you have questions or concerns, again, never hesitate to call. We're here for you. Give my very best to you and your families. Hope you're having a great day, and we'll see you real soon. Take care and God bless.